This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 5, 2026, and this is the After Hours session. Now, let's get into it. The market is currently trapped in a state of extreme fear, with the Fear and Greed Index sitting at a crushing 14 out of 100. Historically, this level of panic often coincides with consolidation or bearish continuation, not an immediate V-shaped recovery. This week, we face a critical test of whether this fear is a genuine signal of economic distress or a sentiment glitch that smart money is already exploiting. We are navigating a week defined by the Reserve Bank of Australia and RBNZ rate decisions, all while gold has surged to nearly $4,200 and the US dollar remains stubbornly strong despite the panic. Let's see if the data supports a bounce or if the floor is yet to fall out. Let's look at the macro reality, because the headline Fear and Greed 14 is misleading without context. The underlying economic data as of late June shows a federal funds rate at 3.63%, with the 10-year Treasury yield holding at 4.48%. The yield curve is flat at just plus 0.35 pp, which is a classic caution signal, but inflation remains sticky at 4.17% CPI and 3.41% core PCE, well above the Fed's 2% target. This means the Fed is not in a cutting cycle. They are in a higher for longer defensive posture.
Technically, we are seeing a market that is consolidating after a massive move. Let's look at the actual price action from the last 5 days. Gold has had an explosive week, moving from a low of 3,942.2 on June 30 to a high of 4,195.57 on July 3. That is a nearly $250 move in 5 days. The current price is sitting at 4,174.93, which is essentially flat from Friday's close. This is a classic doji or consolidation candle after a parabolic run. In technical terms, when you have a gap up followed by a flat close, you often get a pullback to fill the emotional exhaustion.
Let's look at where the institutional money is actually sitting, because positioning tells a different story than sentiment. The CFTC data, as of June 23, reveals a massive divergence in the currency markets.
Let's stress test this contrarian by narrative, because I see massive risks that the bulls are ignoring. The primary risk is the fake-out trap. We have a Fear and Greed Index of 14, which is extreme, but we also have a VIX of 15.81, which is low. This divergence is dangerous. It means retail is scared out of the market, but institutional volatility is low. This often leads to a bear trap where price dips slightly to trigger stop losses, then rallies trapping late sellers.
Let's synthesize this. We have a market in extreme fear, 14 over 100, but with low volatility, VIX 15.81 and tight credit spreads. This is a complacent fear setup. Pulse highlighted the sticky US inflation and the upcoming Reserve Bank of Australia/RBNZ decisions. Grid showed consolidation after a gold spike, with euro dollar and cable in tight ranges. CIPHER showed that while leveraged funds are short euro and long RC, asset managers are heavy longs in euro, suggesting institutional support for a bounce. SPECTER warned that this could be a bear flag or a credit spread widening event. The data shows institutional accumulation in euro and RC despite retail fear. With the VIX low and credit spreads tight, a crash is unlikely. The Reserve Bank of Australia decision on July 7 is the key trigger. If they hold, RC rebounds. If they cut, it dips then stabilizes. I expect a net positive move for RC as the cut trade unwinds. My call, RC dollar bullish, target 0.7 by Friday. This is a 0.6% move from current levels, based on the unwinding of the dovish cut expectations.
Aussie dollar bullish, target 0.7 by Friday. A concise summary of the week's potential. Let's hear the final calls from our team.
Pulse, my call. Euro dollar neutral, target 1.145 by Friday. With US inflation sticky and the Fed holding rates at 3.63%, there is no catalyst for a strong dollar rally. The euro is consolidating after a strong run. The Reserve Bank of Australia decision may provide a minor boost to risk sentiment, but without a Fed pivot. Euro-dollar will likely remain range-bound between 1.14 and 1.15. I expect a grind higher, but not a breakout. The target is the upper end of the 5-day range, reflecting a mild risk-on shift.
Grid, my call. Cable bullish target 1.34 by Friday. The 5-day high was 1.33848. The advanced block pattern on July 3 was a bearish warning, but the price held above 1.33. With the Bank of England likely to remain hawkish relative to the Reserve Bank of Australia, and the fear and sentiment potentially fading, I expect a technical breakout above the 1.3385 level. The target is a retest of the 5-day high and a slight extension to 1.34. This is a momentum play based on the consolidation pattern resolving to the upside.
CIPHER, my call. Dollar-yen bearish. Target 160.5 by Friday. Leveraged funds are strongly bearish on yen, but the week-over-week change of 98,892 suggests a massive shift in positioning. If these funds are flipping from short to long or reducing shorts significantly, it will cause a sharp move, with the BOJ potentially hinting at intervention risk, as per headlines, and the US 10-year yield at 4.48% not rising further. I expect dollar-yen to face headwinds. The target is 160.5, which is near the 5-day low of 160.4835. This is a contrarian play against the trend, betting on the unwinding of yen shorts.
SPECTER, my call. Gold bearish, target 4,100 by Friday. Gold surged to 4,195.57, but the price action is showing exhaustion. A doji close at 4,174.93 after a $250 move is a classic reversal signal. The fear trade in gold is likely overextended. With the VIX low and equity stable, the safe haven bid may dry up. I expect a pullback to fill the gap and test the 4,100 level. This is a risk-off trade within the risk-on environment, betting on mean reversion in the most volatile asset class.
Apex, my call. RC dollar bullish, target 0.7 by Friday. As stated, the institutional alignment and the unwinding of Reserve Bank of Australia cut expectations support a move higher. The target is 0.7, representing a 0.6% move. This aligns with the technical resistance and the flow data.
We've heard the calls. Aussie dollar to 0.7, euro dollar neutral at 1.145, cable to 1.34, dollar yen to 160.5, and gold back to 4,100. A week of high stakes with the Reserve Bank of Australia and RBNZ decisions looming. As we close out this week's analysis, remember that in a regime of extreme fear, caution is key. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.